So the market is convinced that the fact that we returned the government guarantee that was there to cover part of the assets that we took on was a positive. And the fact that we also indicated our intentions on merging the Swiss operation of the two banks was seen as positive. And I guess, we are now, it's up to us to demonstrate that we can do it.
Where are the areas for growth?
Well, that's a very important point for us, because the tendency right now, internally and externally, could lead into not only managing day-to-day and managing the integration, but it's very important for us to think about growth and what to do next. And for us, growth is still this country, US, and Asia, APAC. Despite the geopolitical tensions, I think that it's clear that the trends are there. In this country, as I mentioned before, we have already a lot of exposure in terms of who we are. We are the fourth largest wirehouse. We employed 20,000 people, but the integration of CS is going to allow us to bring up our capabilities in banking, and particularly in TMT, healthcare, financial sponsor, to where we want it to be. In asset management, we are a leader in alternatives now. As I say, Brazil. So we need to really think about more than the sum of the parts, and growing from there, and look at new opportunities. In Asia, I do think that despite the geopolitical tensions and the economic tensions in China, I think that Asia is the place to be for the next 10, 20 years. India will also hopefully play its role in that, because we have been seeing that promise of growth in India, but now I think we see a little bit of momentum developing, so it's plenty of opportunities for us.
Including China?
Including China.
Do you think you have an edge over the giant US banks in Asia, and China specifically?
Not an edge, but I think that we can compete look, we are a global specialized player. So we can't compete across every dimensions of banking. We don't want to compete across every dimension of banking. We want to stay very focused to our strategy, and where it's about managing people for wealthy clients, for institutions, or serving them through the investment bank. I think that we have, in many cases, chances to compete head-to-head with any players. So, but of course, it's a very focused strategy we have.
So you're not afraid to double or triple down in China right now, despite you mentioned the geopolitical tensions getting worse, the worries about the economy, the worries about what direction their leadership is taking their country.
We have been doubling and tripling down on Asia and China over the last 70 years. I think the last five years, it's fair to say that we have been adapting to the new dimensions. I think, of course, China cannot grow at 10% every year, so we are now.
Can it grow at 5 this year?
I don't think so. I think that we're going to be below 5. It's probably 4.8, and maybe next year even lower than that. But of course, it's the quality of the growth that matter, and the stability. And if China can adapt its system to that kind of new growth, that's going to be still promising.
What are you focused on there? The debt problems? Property?
I think that's part of the transition from where they are coming from for the next 10, 20 years. I think, of course, but we cannot avoid it. The biggest elephant, the elephant in the room here is the geopolitical issues, not if and how we can contribute to the China growth story, right? So I think that is the geopolitical trade-offs here, and the uncertainty around how this can develop, how it will develop.
How do you plan for that? How do you do scenario planning as a leader? It's such a big business there.
We do scenario planning. And,
take me inside that.
Well, we have to pay attention. That's by the way, something we do in every country. I mean, we look at expected returns and risk and exposure, and we try to stay focused on what we can control.
And you'll leave it at that.
Yeah.
So the U.S. is also, you said, a big growth market for you, or one of the targets. Where are you hoping to compete there? Investment banking, wealth management? How are you going to get from number 4, you said, to number 2 or 1?
Well, look, for us, it's not just about being number 1 or number 2. I think we are the only truly global wealth manager in the world. I think, of course, in this country, we have very strong competitors. They have critical mass, but it's pretty much vertical US centric. Of course, the US is the largest wealth management market in the world. That nobody has the franchise we have in Asia, in Europe, and Latin America. So our way to compete in the US is to not only continue to focus on the wealthy people, the top end. If you think about in this country, 4 years ago, there was 12,000 people with a net worth over 100 millions. Today, is 4 years afterwards, 36,000. And what we see, also because of the geopolitical tensions, more and more international investors want to invest in the US. And our role in this country is to help people to invest not only abroad through our international network, but also how we help people to invest in this country. So we are a specialized player. Size is important. Of course, critical mass is important in our industry. It's still a very fragmented industry. The wealth management, we are one of the leader and of the top 4 or 5 leaders in the world. But our market share, I would say, is probably no more than mid-high single digits, right? So it's still very fragmented market.
Is it harder to do this integration and focus investors on the growth plan at a time where the capital markets have been pretty sluggish, right? IPOs, M&A, some signs that it may be turning, but what do you see out there in banking?
Yeah, and in addition to that, for our business, of course, we like to have, call it positive volatility. So, I mean, right now, the fact is that you have, low IPO, M&A activity, but also fairly low volatility with financial markets being pretty stable, but with a geopolitical and macroeconomic uncertainty, creating doubts on how investors do. So this is clearly not ideal for our business mix. So the good news is that we are starting to see a little bit of momentum in the pipeline. IPOs year to date are up 5% compared to last year. Today we saw there is a big one. Let's see if this is a catalyst for a change. But so
you're seeing that with deal activity too, green shoots.
There is a good momentum in the pipeline, but the market has to be there and be stable. So we will see in the next 1 or 2 months. I think that's, of course, when I watch the latest development in energy prices, and you saw the actions today of the ECB on rates and so on, that creates for sure some kind of pressure in the system. If inflation is not coming down, at the very least, we're going to have rates high for longer. And the consequences of that is that over time, this will then feed into the economy and potentially create a more challenging pattern. So we are still, for next year, we see global economy is still contracting from 2.8% probably to 2.5%. The US best case scenario is a soft landing, but that's too much of a consensus, right? So basically, the risk is more on the downside, and Europe, it's definitely under a lot of pressure.
Is Europe close to recession? In recession?
Yeah, de facto, technically speaking, some countries are already in recessions.
So the ECB raised rates today. You think they're done?
Well, it depends how inflation goes. I mean, in my point of view, the mandate of a central bank, some of central banks here, so it's not up to me. But at the end of the day, the primary mandate is to fight inflation. In that sense, I'm saying that not only out of purism, but inflation is eating into the purchasing power of the mid class and the low earning class in Europe in a way that could create social tensions. And so has to be addressed seriously. Otherwise, the cost is going to be problematic.
So it
to be
sounds like
taken.
you're not convinced that it's done being addressed or done
Maybe,
flaring up.
as I mentioned before, I don't know if they need to hike more,
Yeah.
but it's going to be hard to come down quick from these levels without inflation significantly coming in.
And that's what you think we need to see, interest rate stabilization, to see the capital markets open back up, or what?
Stabilization or potentially also the outlook that we are going through, the end of the tunnel in terms of, or the curve in terms of recovery. So still to be seen. So we are, as I mentioned recently, I think that it sounds pessimistic, but it's more realistic than pessimistic, I would say.
Your outlook on the global economy?